Welcome back to The Explainer. I am absolutely thrilled to have you with us today because, well, we're tackling a topic that usually feels incredibly overwhelming, but is actually packed with opportunities if you just know how to navigate it. Today, we're walking through a truly comprehensive guide that maps out your South Korean tax obligations and, much more importantly, your tax benefits as a foreign national. We're basing everything we cover today directly on the official 2026 Individual Income Tax and Benefit Guide published by the National Tax Service. My goal right now is to take this really dense, official document and make it totally clear, conversational, and actionable for you. Look, there is a massive and rapidly growing community of expats here. As the National Tax Service points out, thanks to continuous economic growth and globalization, the number of foreign nationals working, running businesses, and building lives in South Korea is going up every single year. And I get it. Filing taxes in your home country is stressful enough, right? Doing it in a foreign country, in a different language, dealing with a completely different legal framework, that can feel incredibly daunting. But I want to validate that feeling and then immediately reassure you. Understanding this system through a structured, comprehensive approach is incredibly empowering. It is not just about staying compliant, it's about making absolutely sure you aren't overpaying. To demystify the Korean tax code, we are going to use a comprehensive 5-part approach. First, a quick welcome to Korean taxes. Second, defining your tax status. Third, the scope of taxable income. Fourth, preventing double taxation. And finally, number 5, special exemptions and credits. Okay, let's establish the basic groundwork. Section 1. Welcome to Korean taxes, courtesy of the National Tax Service 2026 Guide.
Before we get into the heavy details, it's absolutely crucial to know that the National Tax Service, or NTS, actually provides a ton of digital infrastructure and resources specifically designed for foreign taxpayers. This very guide we're exploring today was created to help you easily fulfill your annual income tax obligations. They maintain a dedicated English website, an English language hotline, the whole shebang. The system is designed to be comprehensive and to help you comply. So take a deep breath. You are not meant to figure this out in the dark.
That brings us right into Section 2, defining your tax status, which truly is the foundation of the tax code.
We have to draw a hard, firm line between two legal definitions, resident and non-resident. Now, I want you to completely forget about your visa status for a moment. Just put it out of your mind. Whether you have an F visa, an E visa, whatever it is. That's immigration law. Tax law operates on its own, completely separate definitions. Your categorization as either a resident or a non-resident dictates absolutely everything else we will discuss today.
So how exactly does the NTS define a resident? Well, the magic number here is 183 days. That's essentially half a year. If you have a domicile or a residence in Korea for 183 days or longer, boom, you're a resident. But it's not just about physically being there. If you have an occupation that clearly requires you to stay in Korea for 183 days or more, or let's say you have family members sharing a livelihood with you in Korea, basically tying your life and assets to the country, you're classified as a resident. Anyone who doesn't meet these specific criteria falls into the non-resident bucket.
Now that we know your status, let's look at Section 3, scope of taxable income. Or, put more simply, what actually gets taxed?
There is a stark night and day difference your status makes here. If you're a non-resident, your tax life is fairly simple. You are only taxed on domestic source income, meaning just the money you earn directly within Korea. But if you are a resident, you are on the hook for global income. That means the NTS expects you to pay taxes on all income generated both within and outside Korea. So, say you live and work in Seoul, but you have rental properties back in the United States, or maybe some freelance income coming in from Europe. As a resident, that global income is subject to Korean taxation, and it has to be converted to Korean won based on the exchange rate of the exact day it was generated.
Now hold on, because there is a massive, comprehensive exception to that global income rule. It's called the 5-year rule. If you're a foreign resident, but your total length of residency in Korea over the last 10 years is 5 years or less, you get a huge break. In this specific case, your foreign source income is only taxable if it's paid out in Korea or physically transferred into a Korean bank account. If you just leave that money sitting in your home country's bank account, it is not taxable in Korea. This is a complex but incredibly beneficial parameter for newer expats who are earning money abroad, and it really highlights why knowing the specific details of this guide is so vital.
Let's move along to Section 4, preventing double taxation. Specifically, we're focusing on the foreign tax credit. If you're a long-term resident earning money globally, you might be thinking, wait a minute, won't I pay tax to my home country and then pay tax again to Korea on the exact same money? No way!
The NTS has a comprehensive system in place to prevent this, known as the foreign tax credit. Simply put, if you pay a tax equivalent to Korea's income tax to a foreign tax authority on your foreign-sourced income, Korea will adjust your tax bill to credit that amount. You aren't meant to be penalized just for having international income streams.
And the tax office uses a very exact, clean mathematical formula to calculate your allowable credit. Don't let the letters overwhelm you, it's actually quite logical. A is your total calculated global income tax. You multiply that by a fraction. B, which is your foreign-sourced income, divided by C, your total global income. Basically, the tax credit is proportionate to the percentage of your total income that came from foreign sources. It is a really precise way to ensure the relief matches the burden.
Okay, let's explore the final piece of the puzzle. Section 5, Special Exemptions and Credits, Navigating Relief. Honestly, this is usually the most exciting part for taxpayers.
The Korean tax code offers some truly comprehensive exemptions, but there is a massive catch clearly stated in the guide. To receive an income tax exemption, an application must be filed pursuant to the law. These are not automatic. You have to actively claim them. We are going to look closely at the first two: employment in small and medium-sized enterprises, or SMEs, and the foreign engineer exemption, as these apply quite broadly to a lot of expats. But just keep in mind that government dispatched workers and those earning income from certain overseas navigation on ships or aircraft also have very specific exemption categories.
There is massive tax relief available if you fall into specific demographics and work for an SME. Under Article 30 of the Restriction of Special Taxation Act, if you are a young adult, and they define that as ages 15 to 34, you can receive a staggering 90% exemption on your income tax for up to 5 years. 90%. For people aged 60 or older, disabled persons, and career-interrupted women, you can receive a 70% exemption for up to 3 years. Now, there is a cap of 2 million won per taxable year, but this is still a comprehensive, massive benefit specifically designed to encourage employment in smaller companies.
Next, let's highlight the Foreign Engineer Clause under Article 18. This is an incredible benefit designed to attract global technical talent to Korea. If you qualify as a foreign engineer providing specific services, you are eligible for a 50% exemption on your wage and salary income tax. And here's the kicker. This applies for a full 10 years from the first day you provide your service in Korea. The current guide notes this is applicable for work starting through December 31st, 2026. Literally, having your income tax for a decade is a life-changing financial benefit if you fall into this category.
So we have walked through the comprehensive foundation of your tax status, the crucial rules regarding your global versus your domestic income, how to avoid double taxation, and the specific exemptions that could literally save you millions of won. Which leads me to this final, absolutely vital question. Are you leaving money on the table this tax season? By understanding your precise resident status and actively applying for the credits and exemptions you are legally entitled to, you take control of your financial life abroad. Don't let the complexity stop you. Review your status, check your eligibility for these exemptions, and make the tax code work for you. Thank you so much for joining me for this explainer, and I'll see you next time.